Hey traders, Jason here from Levitt Brothers. So I'm going to do an update of my State of the Market series. Overall, market's doing well. We know that it's trending up. Several of the indexes are hitting new highs pretty much, every week and oftentimes several days in a row. Small caps, mid caps lagging a little bit. Breadth has been good most of the time, now falling off. Trading has been very good. Lots of great opportunities out there. Lots of runners, lots of stocks breaking out and actually moving, not just like moving up a little bit, but actually like running for days, weeks at a time, providing big opportunities. So I want to just check things out. I'm going to look at the indexes. I'm going to look beneath the surface and check out the breadth readings just to kind of get an idea of like what the market's doing and is the movement supported or not. All right, let's get into it. All right, so here is the S&P 500 weekly chart going back to the beginning of 2022. So it's about almost 3 years old. You can see big cup and handle pattern here, breaks out, solid volume, moves up, comes down, tests the 21, moves up again, pretty much tests the 21 other than this open, which was a big gap down, 21 there, and it's been just riding its 8 EMA up since then. There's no way you can spin this to be anything other than very positive. You could possibly argue that the distance between the price and the 50-day moving average, which the blue line here, is getting a little bit stretched and we need a pullback. I guess you can argue that, but when you look at the length of time it's been above this moving average going back a really long time, you can't just assume that we're going to pull back to the 50 anytime soon. Bottom line is we got a breakout at the end of last year and we've been just trending up all year in 2024. It's been a great year. The trend is up. The market is strong. It's healthy. The trend is solid. There's no way you can spin this to be anything other than very bullish. Here's the NASDAQ chart. Pretty much the same picture. You get the same cup and handle pattern breakout over here late last year. Trends up. Test the 21. A little sloppier in here as we got into the middle of this year, but same stuff. It's like riding the 8 up here, lots of big candles, lots of steady positive prints. We've only had 2 down weeks going back all the way to the beginning of September. So market's strong, it's healthy, it's moving up. Maybe the week-to-week price action isn't super smooth, but the overall, there's no question that the market is doing great. Here are the small caps. This is the Russell 2000 ETF. You can see a big sloppy consolidation pattern or basing pattern in 2022, most of 2023. Then we based at a higher level. We based at a higher level again, and now we're up at a new all-time high. We didn't get it last week, but the week before we did get an all-time high. Week to week, the small caps tend to be kind of a sloppy mess. Lots of herky-jerky movement in here. Complete lack of like smooth flowing price action, but there's no doubt that the chart over the last 15 months moves from bottom left to top right. So the trend is up, even though the week-to-week movement is kind of erratic. All right, let's look beneath the surface here. This is obviously the big picture. I'm using 3-year weekly charts. What happens day to day and week to week doesn't affect the weekly charts too much. So let's dig in a little bit closer and see if the long-term trend is supported. So here is the S&P 500 with the 5-day moving average of the NYSE AD line. Okay, we have a pretty obvious divergence in place. Market moving up here, AD line moving here. Here's the 0 line. So we hovered around 0 and then broke below it. Right now we're down here near minus 300. So even though the market moved over the last 5 days, moved up 4 or 5 days, decliners have outnumbered advancers. Okay, so market's kind of getting thin. It's being pulled higher by some bigger stocks that have outsized influence because a lot more stocks were declining day by day than advancing. If we look left on the chart, you see other divergences like here in August where the market pressed higher, AD line was declining, and what happened? The market moved sideways and then down. We move forward on the chart. Here's in September. We have higher highs with the market. We have lower highs with the AD line. What happened is we moved sideways for about 2 weeks. There was one more spurt higher here, but then we got another bigger divergence, and then that caused a little bit of weakness. So when you get these short-term divergences, they tend to induce sideways movement for a week or two, maybe a little bit of a down. It doesn't destroy the overall trend, but in the near term, it does seem to pull the market down. Backing up a little bit, here are the 10-day, 20-day, and 50-day moving average of the AD line. Okay, so just pointing out some obvious things here. There seems to be a little bit of a lack of support in the near term here too. You can see with the 10-day, during an uptrend, we get a lot of prints above zero, a couple prints below zero, but for the most part we get lots of prints above zero. Now we have this rising wedge here, while the market is moving up. So there's a little bit less support right now. It's not in horrible shape. You can argue that it's trending up, but we got to be careful here. If this moves down here, this is kind of like it's just a classic breakdown, and we're market's going to probably follow here. The 20 certainly. There's a difference between here where we have most prints above zero and then here where we like barely moved above, moved below for a multi-month low. Got a nice print here, certainly not as high as over here, but now we're heading back down to zero. So there's a little bit thin, market's getting a little thinner as it moves up here. And then the 50 has been moving down for 7-8 weeks here. Okay, so still above zero. Over the last 10 weeks, advancers have outpaced decliners, but considering what the market has done, considering the gains, the S&P's up a couple hundred points there, you'd think that advancers would be beating decliners by a greater margin, but they're not. So market's moving up, it's doing great. Beneath the surface, breadth has declined some. It's not like screaming bearish, but it's something. It's notable to keep in the back of your mind. All right, here's just the AD line. Okay, it's the cumulative AD line. What I find interesting is that first of all, obviously it's moving bottom left to top right. It's trending up. Advancers are consistently outnumbering decliners, but we have a flat period here, and flat periods tend to coincide with the market being flat or pulling back. So for example, had a flat period here, the market was flat and then dropped, had a flat period here from the AD line, market declined for a couple weeks, had a flat period here while the market pushed higher. Eventually it resolved up, but then it eventually declined. Had a flat to down period here, coincided with weakness here, had a flat period here, coincided with a couple weeks of flat movement here. So right now we've had like 2 months of basically flat movement while the market has moved up. Okay, so the market just keeps pressing higher. It kind of has like an invisible hand that's just kind of lifting it, but beneath the surface, advancers aren't really dominating, and you would expect, given what you see here, you'd expect the market to be a little bit weaker. So something to keep an eye on. The market's strong. You got to keep playing the long side, but have stops in place just in case we're going to have a correction. Everyone assumes the market's going to go up because of December. I'm long for sure, but just in case. All right, let's look at a few others here. Here is the SP 500 up top versus the 5-day high-low. Okay, quick divergence here, market pressing higher, number of stocks in the 5-day high-low has been declining, and then on Friday it closed at negative 773. So even though the market is up, printing new highs almost every day, not the small caps with the NASDAQ and the S&P, the number of stocks printing a 5-day low is much greater than the number of stocks printing a 5-day high. Okay, so divergence obviously in place. The market's getting a little bit thinner, is not very well supported as it moves up. So backing up, this is the 1 month high low. Okay, so 5-day high low to decline, not a huge deal, because you can have a stock that moves sideways for 5 days. You have one bad day and boom, it's at a 5-day low. Okay, but a 1 month low, that backs up long enough that you actually have to move down. Most of the time, you're going to have to actually move down for a little bit in order to print a 5-day, in order to print a 1 month low. Okay, so it's a bigger deal. So market moving up, 1 month high, low moving down. It closed Friday below zero. So even though the market printed a new all-time high, you got more stocks printing 1 month lows than 1 month highs. Okay, so internal pressure building. Market's not fully supported. It's getting a little bit thin out there. 52-week high low, similar situation. Market pressing higher. 52-week high low is barely above zero. Okay, not exactly super encouraging. Given that the market is up here at an all-time high, you'd expect more individual stocks to be at an all-time high also. Okay, is it a dire thing? No, we're not getting like huge negative prints, but on this last push higher, or I should say grind higher, because it seems to be a better word to describe the market, we're not fully supported here. All right, last batch. This is Russell 3000 stocks above their 5-day moving average. Okay, market pressing higher, number of stocks above their 5-day moving average, declining. It's only at 36%. So not even half of stocks are above their short-term 5-day moving average. 1 month moving average, this is a 20-day moving average, so it's basically 1 month. Again, S&P moving up, less stocks printing a 1 month, less stocks above their 20-day moving average. It's only at 51%, so only half of stocks are above. It's not that bad. It's just that the trend is a little bit concerning. Okay, the absolute print is fine. It's normal to not have full support yet. It's actually kind of that actually supports the market going forward, because it gives you a little bit more room to grow. It means a lot of stocks are not participating. But the trend here, where you almost had 80% like a week ago, and now it's down in the low 50s, a little concerning. Okay, market press is higher. More and more stocks are losing their 20-day moving average, which is, for a swing trader, is probably the number one moving average you look at. Last one here is Russell 3000 stocks above their 200-day moving average, so much longer term. Overall, it's trending up. It's been gradually getting better. Okay, recently there's been a little bit of a divergence here, but the overall, it's still doing fairly well. All right, so overall, index is doing incredibly well. They're trending up. Trading ideas have been very good. Beneath the surface, there are some negative divergences in place. Advanced decline line has been flat. Number of stocks above key moving averages declining. High lows on various look-back periods declining. So the market's getting a little bit thin here, so be careful. Okay, you got to be long because the market's doing great. Lots of trading ideas alongside, but have stops in place. You do not want to ride a correction down. All right, hope this helps, and I will see you next time.